Hello and welcome to another Market Gauge Trades and Tutorials video. If you're watching this on YouTube, please subscribe to our YouTube channel and you'll get the videos as they come out. And also there's more information, and this video is also posted on our resources section of marketgauge.com under the Little Big View product, which is completely free, and we're in the trades and tutorials section. Now you can get straight there if you're watching this on YouTube by just going to marketgauge.com/tutorials. So with that, I'm Jeff Bish, president of marketgauge.com, and just bringing you another video to try and help you navigate the markets no matter what the conditions better. And as it turns out, this particular video is being done just a day after I did a webinar called Advanced Strategies and Tactics for Buying Near the Low of the Day. So I'm going to share this video with everybody who attended the webinar just as an example of how to apply some of the things that we learned in the webinar. In promoting it to our subscribers, I promised that they would be able to use what I taught them in the webinar the very next day, and not surprisingly, it came in real handy today. For me, at least. I hope some of you also saw this, and if you didn't see it, well, I'm just bringing it to your attention. So there were a bunch of things that we covered. And if you didn't see the webinar, go to the marketgauge.com/tutorials area, and I'll put the link to it right below this video. But it is a webinar that will not be up forever. So if you're seeing this in the future and you don't see the video or you don't see the link, I apologize. So right now, let's get into what happened in the markets today. At the simplest glance, you can see that the SPYs in the upper left-hand corner here broke out to new highs. I've kind of got it zoomed in, but you can see it's a pretty big breakout. Dow really opened lower, came back, soared back to new highs. Qs continued their march forward, and IWMs also continued to break out to new highs. But what's significant about this as it relates to this particular topic is it was a perfect day to look to buy the pullback that happened in the early morning. And a number of reasons for that. One is the uptrend, but two, everything came right in a line with one of the patterns that I taught in the webinar. In fact, it was the pattern. If you were in the webinar, I said, if you take one thing away from this webinar, take this. And that was, now I didn't focus on the daily charts as much when I said that, but it was part of the webinar. So the thing I want to bring to your attention is what happened today when the market sold off in the morning. And when the SPYs sold off in the morning, they broke 3 or 4 lows. They wound up holding right above the 10-day moving average, but that's not really my focus. My focus is they were breaking down below 3 or 4 days. The Dow was actually breaking down below the 10-day and below 3 or 4 days. The IWMs was breaking down below 3 or 4 days. Now, that said, the market's still in a very strong mode. The Dow is the only one that really looked weak on the charts. The rest looked like they were coming down into support, even though they were breaking those lows. Now the Qs, however, rock solid, nowhere near those prior day lows, and lined pretty much up with that prior high. So if you were in the webinar, you should know exactly what I'm talking about. So we've got this high at 107.22 and this low at 107.28. Okay, 6 cents. That's give or take, that's right on the dot as far as I'm concerned. So the Qs came right down to what I described in the webinar as that hidden number that nobody's paying attention to. But really what was compelling, and the reason that it was a no-brainer for me to buy the Qs, just looking for an opportunity. The markets were weak in this market environment. That's what I'm doing. I'm looking for opportunities to buy when things are down and near the low of their day. So the SPYs, and so now we're looking at 5-minute charts, and we're looking at 5-minute charts with a 30-minute opening range on it. So I'm not going to go into the definition of 30-minute opening range. If you don't already know, just go get the free webinar. But we're looking at 5-minute charts, and we're looking for a really simple pattern to occur down near the low of that 30-minute range. But the reason that we're going to do it today, and the reason that we're going to pick the Qs, is because the Qs were not breaking down at the same time on that daily chart that everything else was. So all the markets were not doing the same thing. Now, this is a little bit of a nuance, and reading into it a little perhaps more than I normally would, but I can't see it there. What I want to highlight is that the SPYs did break their 30-minute opening range by just a hair, and the IWMs did break their opening range by just a hair. Qs never did. Okay, Qs were just rock solid. So when the Qs turned up and had a higher candle close right in here, I knew that that was the pattern that I was looking for. Now, I actually waited for confirmation, so I wanted to see it trade over this consolidation, but I knew at that point that they were most likely going to turn. But the other reason that I was pretty convinced they were going to turn is because even these other indexes that were weaker had the same pattern that we were looking for that I told you about in the webinar. So in the webinar, and now right here again, just pointing out, you look at these four, if they're not all doing the same thing, then there's a good chance there's going to be a reversal. Now, you don't always bet it's going to be a reversal. As I pointed out just a few minutes ago, there was a reason based on the daily chart that today was the day we were going to look for that reversal. So if you're new to that, pay attention to that. That will definitely give you heads up to some great trades. Now, it also happened in individual stocks. So I also did it and took the same concept in VLO today. Now, I did VLO primarily because VLO is really strong, and the energy was looking pretty weak, and I had VLO kind of picked out going into the day because it's been so strong, unbelievably strong, really. And just look at this thing relative. Hard to believe this is an energy stock right now, where everything is in the basement. But obviously, the refineries doesn't care so much about the lower priced oil. So I picked out VLO because it had a really good pattern. Again, one of the ones we talked about in the webinar. Nice strong day. So I was going to look to see if I could get a pullback into this level. And if I could, then I knew, or at least my approach, is that if I could get an opening range reversal, and so over here on the right, we see VLO on a 5-minute chart, and here is the 30-minute opening range. And if I can get an opening range reversal that lines up with me being able to set this level in my stop, then that's the pattern I'm looking for. So I got that more than once, actually. Honestly, I got it right here. And to be completely transparent, I bought it right there, just like I said I would. And the reason I did is because even though I thought we might go lower, or I thought we could go lower, the market at that point was turning up. So I thought that it was a good situation. That said, I put my stop down here under these highs as I suggested you would. So I didn't get stopped out. Remember, I want to keep enough room under that low that it can go under the low and test it and then move higher. Now, had I waited, there would have been another opportunity. You got the higher candle close pattern right in here, and then once it comes back into the opening range, you'd be a buyer right in there. So you would have wound up being a buyer right about at the same time, but you wouldn't have had to sit through the wondering why VLO is going down. Now, VLO was going down because the other energy stocks were going down as well. But nonetheless, it was buying pretty close to the low. I didn't have any pain. I also, I didn't really cover this in the webinar, but I sold half here because this was the high of the day. I wanted to give it room because I was hoping it would break out and just run, which a lot of stocks did. And that's a home run trade. You buy it down here and it breaks out. Sometimes you add up here and it just keeps going. So I sold half there and waited for the put in a no loss stop, waited till just about the end of the day. I certainly didn't sell it up here. again, sold it out against the high of the day. So was it a monster trade? No. It would have been better if I had done UNH, which I'll show you in a minute. That was another one I was looking at. But it's the trade that we're looking for. Look, buy them low, sell them against the highs if you're a day trader. If you're a swing trader, maybe it works into a good entry for a swing position. I wasn't looking for a swing position all the way up here in VLO. I was looking for a strong stock that maybe would just go down to the support area, and then I'd sell it against the resistance area. That was the plan. That's what I did. And that's what I mean when I say, you can do this in any market condition. Now, another one which I didn't do, but I didn't do it. I was watching it. I was very tempted to do it, but I decided to do VLO instead. Nobody's perfect, but I'm already long UNH. So for me, UNH would have been an add. Now, the reason I would be looking at UNH in the first place is because, again, it was coming right down to that prior day low, which we talked about. That's an important level. So if I can find an opening range reversal that lines up with a pattern at that level, it's a really low risk shot. And in this case, this is a stock that I would be looking to hold for a swing trade. In fact, as I said, I already have a position, so I would have just been adding to it. VLO is already extended. I never would have anticipated that we get a day this big, but hey, that's what I mean by a home run trade. I probably should have added here, but again, didn't want to be greedy. I still have it, didn't sell a share. So here we see on the 5-minute chart how the market, this is not, okay, sometimes my trade station needs to be refreshed. So here we see on the 5-minute chart, the red line is the opening range low. Didn't really break it, but pulled right back down to it, and you can see how it lines up with this is yesterday's low, which I showed you on the daily chart. And had we gotten or when we got the opening range reversal higher candle close pattern, it was up here, but you still had a really good relative stop to the low of the day. And this is also one you might have been tempted to jump the gun. Why? Because if you notice, well, it doesn't look like a lot of volume, and it's not really a ton of volume. You'll notice that as the market sold off, there's almost no interest in it selling off. And then the first green bar, biggest bar of the day outside of the first bar. All right, so that's an indication that this could be good, and as soon as you get back above this, you could get in, or you could have waited for the close. Either way, you would have been fine. And again, you're playing for a move back up to the highs, or if you're in a swing trade environment, or you've got a day like today where the whole market's coming back with you, then you wait, see what happens. And when you do this enough, while this is somewhat of an extraordinary move for this particular stock, it's not unheard of, as you can see by looking at the recent history. This thing has had some really big up moves, which is why I said I was interested in it from a swing perspective. It had a pattern that was conducive to a resumption of a swing trade. Today would have been a really easy day to buy it against the low. So I try not to make these videos this long, so I apologize for the length, but it just so happens, as I said, just did the webinar. So if you saw the webinar, here's some examples of how you could apply it the very next day. If you haven't seen the webinar and this looks interesting, there's a link below this video. There will be for a limited amount of time. Click on it. Webinar is free. As always, I hope this helps, and I'll see you in the next video.